A dividend investor looks off into the horizon, sees a hydro pole, and asks himself, how much of this utility company would I have to own for the dividend to cover my monthly utility expenses in perpetuity for the rest of my life? A dividend investor gets into his car every morning, turns the key over, asking himself, how much of the gas company and insurance companies would I have to own for that dividend to cover my monthly car expenses in perpetuity for the rest of my life? A dividend investor rolls out of bed, either gets his Starbucks or heck even pours himself a coffee from a homemade coffee maker and asks himself, how much of these coffee companies do I have to own to pay my monthly caffeine addiction in perpetuity for the rest of my life? Well, today, folks, this is the very question we are going to be analyzing as a dividend-focused investor and chasing true fire financial independence to one day retire early. It always comes back to that cash flow and those juicy dividends. So what we're going to do is break down all of these questions individually, everything from phone companies to utility companies, to see how much exactly you'd have to own for it to pay your bills in perpetuity for the rest of your life. So in the clarity of my transparency and all the wonderful homework I present to you guys, I want you to hit that like button. Now, keep in mind, obviously, tax inflictions come into play here. We're not even talking about capital gains or capital growth. We are just purely talking about those juicy cash flowing dividends. And then at the end of the video, I'm going to share with you my own personal juicy cash flowing dividends that I make from these actual companies. These are all companies I own, by the way. So kicking it off, let's take a look by talking about our phone bill and our internet. Now, I pay about $50 a month. I always buy my phone outright because I always want to keep my phone bill as cheap as possible. And everybody knows if you upgrade to a new phone and you don't buy the phone outright, they upgrade you to a new plan, which at the end of you paying your phone off, that plan will always cost more than usually a plan you had prior. So I pay about $50, $55 a month for my phone plan. Now, I live in a rural area. I do pay a lot more for internet, about $100 a month as it is, but the average person, I believe, with their phone bill and internet, probably not costing them much more than $100 a month. So taking a look at TELUS Corporation, a stock that I own, a very well-known telecom company here in the Great White North of Canada, guys, pays a 4.79% dividend yield if you were to buy it today. It's not trading at a major discount or anything like that, but we're not talking about valuation metrics. We're just purely talking about how much would I have to own at $100 a month to cover my phone and internet bills. And taking a look, guys, you would need to own about $25,000 worth at this very moment to be making almost the dead even $1,200 annually, or divided out $100 each and every month. That is not actually that bad at all. To come up with 25 grand, guys, I know it seems like a lot of money up front, but you're literally saying, you know, how many years is it going to take you to come up with 25 grand? Maybe 2-3 years. Yeah, that's a lot of upfront time and savings, but in perpetuity now for the rest of your life, for the next 20-30 years you're going to live, you'll know that your phone bill will always be covered. It's a very humbling feeling. It feels good inside when you start building this stuff up. What about cars? Cars are one of the biggest expenses most people will face in their life, and it's a real curious question because a new car costs most people maybe $40,000 or $50,000. So how much of these kind of, let's say, insurance companies, gas companies would you have to own to cover those car expenses? And for me personally, I spend about $200 a month on my vehicle between repairs, insurance, and gas. That does not include if I have to replace that car. So let's not include those prices, though you could and run the math a little bit differently. But just for the basic monthly expenses combined, let's talk about maybe buying BP. Now, I do not own these gas companies. I'm not a fan of them. This is just to generalize, but BP right now pays a 4.77% dividend. It is one of the largest oil and gas producers. And if we were going to go down the insurance pipeline of it, just to make sure we're always getting a little bit of money back from companies we're already paying money to, we could say that we could round it between maybe a 4.6% dividend yield just between these two companies. Now, these companies in particular, I don't actually own them. This is just purely for the example side of it, but we can see that you would need about $55,000 invested at 4.6% to come up with about $2,530. And that would just get you over the $200 a month hurdle here, guys. So for literally the price of a nice brand new car, if you could just hold off by driving a real beater of a car, save up 50 grand. Well, if you invested that, and again, not even talking about capital gains, just the dividends alone would now cover your car expenses in perpetuity for the rest of your life. You're welcome. Let's talk about utilities, guys. Now, I own a bunch of utility companies. It's one of my favorite sectors in the market because it's stable. Everybody needs the lights turned on and their fridges refrigerated and toilets and everything functioning off the electrical system, right? The electrical grid. So I own a variety of these. There's one big one in the US called Southern Company, does nuclear, coal, natural energy, all kinds of stuff. I own a natural energy, pure renewable play called Northland Power that's globally diversified. And then I also own a company called Hydro One, which just focuses on distribution, the hydro lines themselves. themselves and just how that hydro travels through. They don't actually make the hydro, they just own the infrastructure behind it. And all of these companies combined pay a variety of different yields, from 3.5%, Southern Company at 4.15, Northland Power at 3. So if we rounded this off, let's just say we're making a 3.5% yield, you would have to invest about $45,000 and you'd be making about $1,575 or more than $130 a month, which from my understanding is the average utility cost for most people. I feel like it ranges drastically depending on your living circumstances, but here in Ontario, specifically Canada, where I lived, Great White North, guys, it'll like if you appreciate the Canadian perspective on things. But let's just presume, guys, that your average utility bill here is between $120 and $200 a month. So I've kind of rounded it to a lower end median. However, you'd still have to invest about $45,000 to $50,000 to keep your lights on. Now, let me just talk about the broader view, because obviously I could get into a lot of other things, but we could talk about food, housing, a ton of other stuff here in between, guys. So let's just group that together. To pay for your rent, to pay for your food, what would we have to do? Well, we're not going to shove it all into one stock, obviously. So I'm just kind of bunching together a bunch of them together here to give you a broad dividend perspective, because we could talk about Pepsi for food. I own a REIT called RioCan, which pays a much higher yield for, let's say, living and rental expenses. And then you could even own the banks, which pay really healthy yields here in Canada. I mean, Bank of Nova Scotia is paying a 4.5% dividend as it stands right now. And if we were to break down some of the math on this, now this is really cut down, but let's just presume you're spending $250 to $300 a month on food and you're spending about $1,000 a month on rent. This is very compressed numbers. If you were living frugally just to cover those dead basic expenses here, folks, you would have to come up with, and I know this is a big number, about $450,000 at that average 4% yield if you were to able to attain that by averaging companies like Pepsi that pay a 3% yield to everything from REITs and banks that might pay around a higher 5% yield. But that is not bad, because that would equate to that $18,000 annually, or roughly, $1,200 to $1,300 a month. That would hopefully just keep dead basic, really cheap food on the table and guarantee that that roof is going to stay over your head. Now, bringing it all together, folks, how much would you actually have to have invested just to keep all these dead basic, presuming you're living extremely frugally, expenses paid for in perpetuity every month for the rest of your life? Well, you'd need about $575,000 invested at around 4%, which would equate to about $23,000 in annual dividends, which obviously if we divided that out into monthly expenses, you'd be looking at roughly $1,916 a month, or roughly $2,000 a month. Now, so look, I know $575,000 is an excessive amount of money, but the fun part about this, guys, I started by showing you the smallest expenses first, because if you can use that as motivation, once you get the ball rolling, again, discluding capital gains, the dividends, you can reinvest them if you do not need to live off of them right away. And with those dividends reinvesting while you work and apply capital to your account, it will grow so much faster than I promise you can imagine. So you need to focus on the individual things before you start looking at the bigger picture, because looking at $575K is not going to get you motivated. But seeing that if you came up with just $25,000, that your basic phone and internet could be paid for in perpetuity, it's a very motivating thing. And just taking a look at my personal brokerage accounts, these are only two of my accounts, and these two accounts alone will produce over $600 a month, probably going into next year. I mean, on the Canadian side of the border here, I'm getting $2,565 annually, by the way, off everything from utilities like Hydro One to Canadian banks to utilities and REITs. And going into my US side of the portfolio, I'm getting $2,100 annually from companies like Apple, tobacco industries like British American, Altria Group, Microsoft, you got Southern Company, and even another REIT called Stag Industrial. And then going into another brokerage account, I'm making $1,741 annually off roughly the exact same companies. And most of this is 100% tax advantage, because the government gives us these tax advantaged accounts, guys. I'm only 29 years old. I started when I was 23. And yet, I'm not talking about a lavish life of luxury. Heck no, guys, it is not. I still have to work and do a lot in between. But, grinding it out for the last 7 years to make $600 a month, and that's like their bare minimum. I could raise that a lot more. I hold a lot of growth stocks. I could leverage down my Apple, my Microsoft, those things that don't pay as much. But at the end of the day, guys, $600 a month basically covers all of my dead basic expenses in perpetuity for the rest of my life, presuming I don't live like a lavish king. It makes me sleep ever greater at night. It gives me a sense of security, and I own really solid foundational companies, because I'm not telling you to chase 8% yields like most people will. Those are usually very deadly and dangerous, guys. It's very rare finding a stock that pays over a 6-7% yield that is long-term reliable. So I always try and focus on more stability and sustainability, because over the longevity, especially if you're in your 20s, it's going to work out much better for you than taking on a high risk period where at some point in the future you're going to get dinged, and I have experienced it, believe me. Believe me, with companies like GEO Group. But in light of all this, I'll pass the question off to you. What do you guys think about all this in that comment section below? I just thought it would be a fun, cool video. So stay cool, stay awesome, and I look forward to catching you tomorrow.